Is the lag time? Yeah. Well, I mean, we'll see how this actually records, and this is going to be a working theory. So, unintended consequences. Welcome back to the channel, and I need to hit pause here. There we go. All right. Welcome back to the channel, Justin. You are far away from me. Where are you at?
I'm in sunny Breckenridge, Colorado. I'm literally looking right at the ski lift going up the mountain here right now. So
So we're gonna have a hard cutoff because you're gonna go skiing with a bunch of rich people.
I'm actually not skiing. I'm actually gonna stay in the hotel room, get caught up on some uh, agent business transition stuff I've got going on, which we can talk about that later.
So we are gonna start off. We'll jump into that because you just made a big transition. That's exciting. Unintended consequences. This is something you brought to me. You were saying, "Hey, look, there's some interesting stuff going on right now." I think you were
Yes,
mentioning in California specifically.
exactly.
What's
Well,
up?
there's two things that are in the news that just kind of caught my eye going into the YouTube world. And the first one is California, the second one is in Washington. So the first one in California, and some background context, when I was at Amazon, I was working in the commercial real estate space, leasing office, I mean not office, but helping pick the sites and doing commercial leases. So I'm still kind of following that kind of stuff. And so I saw this thing about California increased the minimum wage tax to from 22 to $25, which on businesses that have high margin, i.e. tech, not as big of an issue. But retail, they typically make 1 to 3%. So a profit on every dollar that comes in, they make like 1 penny to 3 pennies. So as you increase labor, which, what is that, 15% or whatever, that 22 to 25, it's a
Mhm.
huge impact because that's the number one cost for pretty much all retailers is the labor. And so it just started a ripple effect of unintended consequences, right? So step one, obviously Walmart cost goes up and they're like, hey, it's not profitable for us anymore. So then they're like, okay, let's close some stores that aren't as profitable. So when they close these stores, then that goes into the people that were working there obviously have no jobs. So now that impacts the jobs. The people now into the real estate space specifically, those were triple net leases. When you have a Walmart in your shopping center, that's like typically the best tenant you can get, the safest triple net lease type client, right? So they ended up originally, I think they started with 50, but now they're shutting down 250 stores in Southern California, which then gets into, well, if you shut down that many stores, then you don't need they were going to launch a distribution center. So now the distribution center is also not going to launch. So you're losing like obviously, I don't even know how many jobs because that's 250 stores, probably 10,000, I'm guessing. And then the warehouse is like 600. So you're losing the employment, you're losing selection for people for groceries. And then for the real estate people, you're for the triple net people, they lost like a key client, right? And then for the mom and pop landlords, your tenants are these people working at the Walmarts. So if you had kind of a rural California, let's just say there's, 10,000 people there. And if there's, a couple hundred people working at Walmart, that's going to have a ripple effect on your rental income. Because like probably one of your tenants that works there, and then they're going to get behind on rent.
Yeah, that's unintended consequence. Something I heard years ago, and it seems more and more true now that I'm actually an adult for an extended period of time, longer than a couple of weeks.
Yep.
If you raise minimum wage, the only thing that really comes from it is you have more people on minimum wage. That's the like for sure certainty.
Right.
I heard that from Cardone and love him or hate him. I don't follow him as much as I used to, but I believe that to be true.
Right.
One of the consequences is a percentage. If you raise minimum wage, is now you just have a bigger percentage of people working for minimum wage. And some people say, well, you should raise it, and some people say you should gain skills or apply yourself to try and earn more money. There's
Exactly.
different perspectives. However, when you do raise it up for the folks who think you should, you have these issues.
Hmm.
It'll be interesting though to see what happens with rents now that minimum wage is up, if rents go up or if they decline, because now there's a lot less jobs. Are you seeing that with anybody else, or are you just seeing it with Walmart specifically?
So in this YouTube video, they are mentioning that Target's also doing very similar. So kind of your big box retailers, whether that's your traditional grocery stores or kind of your general merchandise grocery stores, the Walmarts, the Kroger's, the Fred Meyers, those types of operations, it's starting to impact them as well. So they're just starting to like, hey, let's just consolidate down. Let's the stores that we do have, let's increase the volume through there and then keep them profitable and then kind of shut down the non-profitable ones. And um, as I was reading this, it's triggered me. So like when I was in college, I was a ag business major and I took a lot of economics. And there's it's called the Pareto efficiency, I think is the term for it. Or
Okay.
basically it's saying you can't make one person better off without hurting somebody else. And this is a great example. It's like, oh yeah, you're helping the minimum wage people, but by helping them, you're hurting the businesses. And by hurting the businesses, now it like loops around and hurts some of those specific employees that thought they were going to get more money. So, that was one major impact. Now, it's obviously bad for Southern California, but if you are a retailer on the border, let's just say Nevada, theoretically, I think Barstow, California is like close to Nevada, if I remember right. People could go over to Nevada, go buy their stuff over there, and then come back over. So now there's the tax revenue loss for California as well. So they have the sales tax loss, and then they have all those taxes that come from the sales, and then just the profits from Walmart. It is massive hit to the economy. So which then goes into I'm just kind of like stair stepping it down. Is like now I'm thinking about to cover that gap in funding for California they have to take it from somewhere. Now, where do they take it from? The some of the money they're spending on homeless people for Section 8 housing, that's going to be infected. So the ripple effect on this is pretty massive.
Yeah, and let's talk about other unintended consequences in business because we talked about basically at the government level where you're
Yep.
forcing certain things upon businesses. As a business operator, you own real estate, you have parking lots you rent out. I think that's a great model. I'm going to be parking my vehicle at the airport just for a timing thing, but for other folks, what you offer is great. What happens? What's an unintended consequence for a landlord if they don't raise rent?
Well, a couple things. One that I can think of, if you have short-term debt, Um, so for example, I had a lot of Midwest properties on commercial loans. If you're
Mhm.
not keeping up with the rents, and this is what happened to me, is like where I thought I was fine. Typically, we were fine. The interest rates were, you know, pretty steady Eddie for a while, right? So with the commercial debt, they reset every 5 years. So if you don't increase the rents and your commercial loan is coming due, and where I was at, it was going to go 3.75 to about 7%. So double. So if you're not increasing the rents, now you don't have the rents there to pay for the higher mortgage. So so I ended up instead of refining at higher levels, I ended up selling 1031 and moving that from the Midwest back into the Seattle area. So um, so that's one thing that can affect you on your cash flow. So is it easy not to raise the rent? 100%. But the other unintended consequence specifically for me in Washington, and this was a error on my property manager, is the property manager, we were supposed to do the binder method,
Mhm.
Dion's method, right? So the tenant was at 2,100, the fair market rent's 3,500 for the Section 8 tenant. We were gonna do the binder method, theoretically close that gap, right? If say even half, right? That's $700. Well, and I told him to do this, right? The property manager. Well, the property manager ended up renewing a lease with like a 5% increase, which is like $100, right? So now normally not okay, I'll just do that next year. But what happened? Back to the Pareto efficiency. Washington put a rental cap in there, right?
Yep.
So now if I would have had that big jump, then I could have been working on a bigger base to increase. So that's another unintended consequence where if if your local government, if you don't raise the rents and local government puts a rent control in, your amount that you can increase in the future definitely is capped.
Yeah, and I'm seeing that firsthand in stuff here in Moses Lake. There's properties listed for what they could have sold a couple years ago if the interest rates were the same. I'm not saying like in the different market, but
Right.
if we didn't have rent control, it would have been fine because these owners haven't raised rent in years. They're
Hmm.
renting their 2 bed, 1 bath with washer dryer for less than my 1 bed, 1 bath without.
Right.
And
Jeez.
that's just, but that's I'm closer to market rent. They could raise the rent 350 to $400. And
Hmm.
that's how they're marketing it for sale. But it's been on the market for maybe half a year and nobody wants to touch it. And it's because they didn't keep up as a business operator.
Hmm.
They got a bad stroke of luck with the rent control.
Hmm.
But really, that wasn't the issue. The underlying issue is they didn't keep up with market rent. That's their fault.
Right. Which
So
translates to sales price ultimately, especially on commercial, right? It's directly
yeah,
proportional.
and had we not had rent control, sure, they might have been able to sell for a little more than they could today because people will buy a little bit on pro forma, but they're stuck. They're listed for 700,000 more than it'll appraise for.
Jeez.
And it's going to take 5 years to get to where the rent should be.
Hmm.
And the problem with that is by the time you get there, you're going to be behind still. So you can never
Right.
catch up.
Exactly. Which the ironic thing is, and these are bigger numbers, right? So they're trying to increase the rent, the max. I'm assuming it's similar over here. It's like 7% cost of living. It's around, depending on where you're at, 9 to 10% max, right? Now they have a huge tax bill, right? So a small increase in the tax bill can be greater than the rent increase on some of these properties. So you have to watch that because you can, quickly be in a spot where insurance and your taxes go up, even if your debt's fixed, these expenses can go up higher than your rent control, right? So it's definitely something to watch there. And speaking of sale price related to low rents, I actually have um, a duplex for a client of mine that we're selling. It's under contract right now, but they hadn't raised rents for I don't know how many years, and market rents is probably 2,800, maybe 3,000. They're at 2,000. And so the duplex price, for somebody to even house hack, yes, it's good to house hack that option, would be a great option. But if you're just looking at a straight investor, they're not able to pay what the seller wanted to pay because of that. So with rent control, we're like, hey, you should go to your tenants and now put in a rent control to at least have the increased rents and keep them on month to month so that at least they know whoever's going to buy has the increased rents, you know, coming up. So, we ended up lowering the price quite a bit to end up getting it moved because they wanted to do a 1031 for another property. So if they would have had the higher rents, they probably would have sold it already at basically the price they wanted. But instead, they're taking a lower price to get it moved into another asset in another state.
Yeah, and something else I've noticed with not keeping the rents up, if you don't keep the rents up, and unintended consequences, you can't keep the building up. Can't afford to. I've seen a
100%.
lot of people that they keep the rents down, but what they do is they sacrifice the quality of the building. So they're saying they're helping affordable housing, but what they're really doing is just creating slums. And it
Right.
doesn't happen overnight, but if you're not making the profits that you should be to pay yourself and fix the building, you start to it's like the ethical boundary line, right? You start moving like, I don't need to fix that. I'm keeping the rents low. I can't fix that. I don't make enough money to justify it. And your building slowly goes from class B to C or C to D, and your tenant quality goes down, and the building quality goes down, and you just end up losing a whole bunch of money on equity and cash flow.
Right.
I don't know if you've seen that on anything in your portfolio or if you've seen it from people you looked at buying from, but I've definitely seen that where people keep the rents low and their building just goes to crap.
Hmm. I've seen it more so with clients that are looking to either buy or sell. So when we're looking to buy, we're like, man, there's a lot of deferred maintenance here. And more so in the Midwest, there's, the economics are different there on those ones. So you can see like these buildings are over 100 years old and they have low rents. And so over there, they don't have rent control yet. but it's definitely something where uh, they're not pumping the money to fix the property up. So you have to know if you end up do buying that, you're going to have a higher OpEx at a minimum, and you're going to have some sort of big capital event, most likely a roof. So like the easiest thing that I've seen is like when they're not doing the rent is like the roof. The roof will just they won't change the roof until like some massive catastrophic either it caves in or floods the attic space or one of the bedrooms, and they'll just let that go because it's a massive expense, especially when you get into these larger multifamilies, which I did that 2 years ago, and I think we were paying, and this is Midwest price, so we were paying like 25,000 a roof. I think it was for a 8 unit building. Over here, I bet you that's 40, 50,000 if it was like Seattle or maybe more. But man, they're big ticket items that end up just getting deferred and deferred and deferred.
Yeah, I had to do two roofs on my 12plex. It's two side by side sixes, and I did a butterfly roof, which is not flat. It's actually
Uh-huh.
inverted. I did that to a pitch roof conversion, and it was like a hundred and something $1,000 years ago.
But that was structural though, right? Because you built
Yeah,
up, yeah. So you had the roof by itself. What do you think that was? 50,000? Just
yeah,
just the
probably.
yeah, okay. So
Yeah,
half
but
is the construction and half is the actual new roof.
yeah, but the thought is if you're gonna have a flat roof or a butterfly roof in a place that snows, it's probably a recipe for disaster.
Yeah.
But the prior owner just kept putting tarps on it
Yep.
for decades.
Hmm.
And so I'm hearing and seeing the same stuff you're talking about. People just milk their properties but the rents were 550 to 600
For one bedroom or two?
for those units.
Wow.
And market rent was a couple hundred more than that. Like it's what happens if you don't keep it up. You can't keep the building up. So
Exactly.
let's talk about your transition.
Hmm.
You are a real estate agent. You
Right.
sell a bajillion properties and you just made a big shift. So what's going on?
Yeah, so I was at Keller Williams for, geez, almost 4 years, and I'm switching over to EXP. And the Keller Williams, the first couple years was just me active, doing my own deals and helping clients out. And then the shift last year is to build a team out so that I can still do the life by design, travel like I am now, still do deals, but have boots on the ground, a team. And the cost structure and the support between Keller Williams and EXP, what I noticed is that um, this other new group, EXP, it's part of what's called a co-founders group, the operational support and the sales support to one, train my team and help me get some leverage on operation, leverage on my time is so much greater over here that we can provide more value to the clients, right? So we have a lower cost structure and more leverage for time and efficiency, which translates, we can spend more time with the clients. So instead of like back office type stuff, we can do more one-on-one meetings with the clients, more meeting at the sites, more property analysis. So I'm excited about the shift and expanding the team into I'll probably end up I'm looking to push the team almost to double next year, to continue to expand, focusing on helping people build wealth through real estate. So these people that want house hacks, could be out of state rentals. We can help with that too. Just rentals around them. But we do also do the traditional residential. If you just want to move up or move down in a house, we do that as well.
Do you see the resident or the actual investment side? Do you see people mainly buying duplexes to fourplexes or people buying bigger? What's going on?
A lot of the clients right now are doing most recently we have still the single family with Dadu, which is continues to be the hottest trend. But there's less and less of those and there's more competition. So it's been harder to get those, right? Because like, just because it's listed at a price, it ends up going 25, 50, 100, even hundreds of thousands above list. So it ends up pricing some clients out. So we're trying to look more opportunistic at effectively arbitrage type items. So, like I'm doing one, it ended up not working out great, but if you can find like two houses on one large lot, how can you, whether you condoize that or short plat it, can you take an existing thing and it's a reverse synergy in a way. So you're taking one and splitting it up, and then it creates more value. So we've done that with a couple clients, and we're looking for more of these opportunistic type items where there's value there if you're willing to change the setup of the property.
Are you gonna just broker in Washington State, or do you see yourself branching out? Because EXP is nationwide, right?
Mhm. I think the my end game is where I have under the brand W2 to freedom is where
Mhm.
the goal for that is as people break away from their W2, they need a side hustle. So for me it started as real estate, just long-term rentals. Then I started doing fix and flip and then wholesale, and then I added the agent thing. So as I'm working on that W2 to freedom brand, outside of the greater Seattle area, I could work with people getting their license out of state, helping them getting up and running, obviously at EXP to get their license and build up that side hustle initially for the capital to buy real estate and then start getting that real estate to build up that cash flow. Then you could two-step it. You could go into the agent business, build up the agent business, my own real estate, and then full on retire. Or you can just do as busy or as light real estate agent stuff as you want to continue to buy properties. So I think
Cool.
that's where the end game is. It could be, maybe 5 years down the road though for that.
Well, on the topic of the video, we're gonna wrap up with this because you do have to go. What unintended consequences do you foresee for doubling your team size? Because you mentioned, hey, I think I can double it, double what we're doing. What do you think could possibly come from that that could be negative that you're not expecting or not hoping for?
The biggest thing that I've seen, because I've already seen it today. So in 2020 was at four. In December, I had two people join. Those were the first two people. And then I went all the way up to eight people over the course of 25. And um, the unintended consequences, it forced me to learn how to become more efficient with my time, which hence got me into switching to the brokerages because this other brokerage will help me train the team. So the unintended consequences is that typically they're newer agents that come in. So there's a
Mhm.
lot of heavy lift on here's how the contracts are, here's how this implements actually within the systems and tracking and the people involved, and then how do you interact with clients? And then specifically for us is when you're working with investor clients, it's not about emotional, it's about thinking with your mind and having the financial. So then how do you run the analysis? How do you communicate that with clients? So the biggest thing is how much, can I lever the new group to train up the team and where I can focus on new client acquisition, and then the uniqueness of us is focusing on real estate investing type properties. So coaching the team on how to work with clients on those and how to analyze them, that is going to be a better use of my time.
Sweet. Well, where can folks follow you, connect with you? Where
So
are
the
you at?
main one is W2 to Freedom, Instagram, YouTube. I'm getting pretty close to where I can do YouTube lives. I only need 8 more subscribers on my channel. So if you're watching this and you're not subscribed to W2 to Freedom on YouTube, please go there, subscribe, then I can start doing we can do YouTube lives together instead of just Cody going live on his channel. So W2 to Freedom is the main spot to get a hold of me.
You got to get to 50?
Yeah.
All right, you're growing. You were at 31, I think, or
We're
27
at
when we first.
42 now,
Mhm.
so slowly but steady increasing, increasing at an increasing rate. So the more of these lives that we're doing, obviously your following is different from mine and our network of people. So, you'll the purpose of doing these lives is to help cross-pollinate channels and then everybody grows, everyone wins.
Awesome. Well, have fun in Breckenridge. I'm gonna have fun in Cold Moses Lake, and I'll see you next week.